Hi, my name is Layla and I'm the owner of Top Financial Agency. And in this video, I'm going to talk to you about what I believe is one of the most fundamental and important financial products out there that is, I think, foundation to every other thing that you have. It provides you generational wealth, legacy, income replacement, tax-free income, and it avoids probate. So what am I talking about? I'm talking about life insurance. And when people think about life insurance, they think, oh, it's just when you die. And sometimes people think I'm too young for life insurance, or they think I don't have any kids, so I don't need any life insurance. I think it's because people just have a basic understanding of what life insurance does, but they don't realize all the benefits that it does. And I think that life insurance is a very versatile product. So obviously, yes, death benefit, that's what everybody knows about life insurance. If you pass away, your beneficiaries get the money. And why is that important? Well, if you are one of the main income providers for your family, and if God forbid you walk out of life insurance walks in. Now, I know because I'm a widow, so I know firsthand what it's like to have your husband pass away completely unexpectedly, and then you're left with twins at age 11 and a half months old. So I became widowed. I had two babies under two. And I was able to take time to grieve, take time to figure out my next steps because my husband did proper financial planning. Well, because we're both life insurance agents building our business together. So we knew about it. And thank God for that because I was able to grieve, take time off, but maintain my lifestyle. I didn't have to move out of our home. I didn't have to move in with my parents. I didn't have to lose my home. In fact, because of the life insurance, I was able to buy a brand new home. My daughters have their future completely set up. My retirement is set up because my husband provided a legacy for his family. But there's so many other benefits when it comes to life insurance. There's a living benefit. So life insurance isn't just when you die. You could use life insurance while you're alive. So in case of chronic, critical, or terminal illness like heart attack, cancer, stroke, things like that, you could use your life insurance while you're alive. Now you might say, well, I already have health insurance. Okay. Health insurance might cover the cost of your hospital stay. It might cover all of those medical expenses. Hopefully it'll cover most of them, if not all of them, but it's not going to cover your rent. It's not going to cover your mortgage. It's not going to cover your grocery bills. It's not going to cover any other bills. It's just going to handle the whole health aspect of it. So let's just say, God forbid, there's a heart attack or cancer or stroke that happens. And let's say you need to take time off of work. So yes, your health insurance is going to kick in. It's going to take care of all those medical expenses. But once you go back home, let's say you can't work anymore. How are you going to continue to pay those bills and the rent and the mortgage? How long can you live off of your savings? But then the next question is, do you want to dip into your savings, or would you rather have a policy there that you can dip into so that you don't have to dip into your savings? And that's where living benefits comes in. Now, sometimes people say, well, I don't need life insurance for the rest of my life. There's a philosophy out there that says buy term and invest the difference. I think that because life insurance has these living benefits, I think there is a big benefit to having a life insurance for the rest of your life. Because if you have cancer, heart attack, or stroke when you're 70 or 80 years old, this life insurance is going to kick in and help you pay for all of your expenses when you're a senior. When at that point you're living off of Social Security, maybe a pension if you're a boomer, really, because after boomers, it seems like generations after that don't really get pensions. So let's say that you're a millennial or a Gen X. Okay, now you're 80 years old and you're living off of Social Security, if it's even going to be there, because it also says the government's also saying that it might be depleted. So we're relying on little Social Security. We're relying on our 401ks, and then heart attack, something like that happens, and now you're going to dip into your savings. This is why you need living benefits, life insurance with living benefits, so that you don't have to dip into your savings. And this is money that you could use in case of any unexpected illnesses, which, by the way, bankruptcies, one of the leading cause of bankruptcy is unexpected, unforeseen medical expenses. Number two, avoids probate. Life insurance avoids probate. When my husband passed away, I got a check in the mail, income tax free. Also, it avoids probate. Um, by the way, we also do wills and trusts. If you don't have a will or a trust, reach out to me and I can help you set that up for yourself. So, if you don't have a will or a trust, life insurance avoids probate. So, this is money that you can pass down, create a legacy, and your family doesn't have to go through probate. Now, if you don't have a will or a trust and there's other assets that you have out there that are going to go through probate, life insurance is going to help them pay for whatever expenses or whatever taxes, depending on what assets you have, they're going to have to pay for. Number three, it provides a tax-free income. So there's three different types of life insurance. There's term, there's ROP, which means that if you don't pass away, you get your money back. And the last one is permanent life insurance, like a whole life or an IUL. An IUL is building up cash value. So I want you to picture two buckets of money. This is your death benefit. In case anything happens to you, you walk out of life. This goes to your family, income tax-free. And this one is growing cash value. So this is money that you could loan against to use and not have to pay taxes on. The living benefits are going to come out of this bucket, the death benefit. So the death benefit is used for living benefits or death benefit. The cash value is money that you can use for vacation, emergencies, kids' college, whatever you want. This is money that you are using out of this bucket. And why do I say potential tax-free? Because you're loaning against it and we don't pay taxes on money that we take loans out of. Now, why do I emphasize tax-free income? Because it's tax diversification. When you think about the places that you can put your money, you can put your money in a tax now box, tax later, or tax never. If an IUL provides you tax never income. So if you only have money in a savings account or stock market, and then you have some money in 401k, 403b, other tax deferred products, this provides you the tax never category like a Roth IRA, but Roth IRA has contribution limitations. So if you'd like some more information on, which I think is the most versatile, one of the best financial products out there, then reach out to me at topfinancialagency.com. Thanks so much. Have a great day.